I think a lot of roles will change and they should change. There's a lot of overweight departments in banks with the rise of AI and how good it's now become. I think there will be a huge change in the years to come with regards to a lot of roles. For example, an analyst on a desk using AI to analyze annual reports of a company and see, okay, well, what are the risks and opportunities with this particular client? And for this particular client, not a great value add of their time. What is good value add is actually
Benjit Dhesi is the founder and principal advisor at Hedge Exec and previously co-head European Derivative Solutions at SMBC Group. He specializes in derivatives, risk solutions, and capital markets, advising organizations on hedge strategy and treasury risk management.
For someone listening to this, what does someone with that sort of experience make of where the crypto digital finance space is heading, and where does the institutional world need to catch up?
I think there is definitely a space for both. If we look at the traditional banking space, for example, they've got a lot of balance sheet power. They understand customers and their client set really, really well. And one thing they're not so good at is
Benjit, welcome to the show. Thanks so much for joining. Could you give us a quick intro into you before we get into it?
Yeah, sure. Well, thanks for having me on, Bill. So my name is Benjit Dhesi. I'm a senior capital markets professional. Spent nearly 2 decades in financial markets, and actually have quite a varied career. So it spans British Army, Lloyd's of London, so the insurance sector, Lloyd's Banking Group, and 12 years at SMBC as managing director and head of corporate risk solutions. I left SMBC around 9 months ago, and now I'm running an independent advisory called Hedge Exec. So I'm working with UK corporates and regional banks on hedging strategy and execution. And then also I've co-founded a digital assets business, which focuses on systematic trading and data analytics. And I'm based in London.
Fantastic. Well, thanks for that quick introduction. Sounds like we've got some great learnings, insights, and experiences to hear all about today. So why don't we get started where it all began and university, so from degree into your career in the army.
Yeah, great. Yeah, it's quite an unusual background, actually. Often when I speak to people, having been in the army and then going into financial services. So yeah, let me start with that. So my interest in the army actually started when I was about 15. So it wasn't at university. So it started a lot earlier. And I really looked at exploring that route, which at the time the army had a bursary route, where you would commit to the army. They would send you to university, but then you have a longer commitment period on the other side once you graduated. So that's kind of something I was genuinely and actively pursuing at the time when I was about 15. And I had a cousin and who at the time gave me some advice. And he was about 10 years older. He'd been to university, had started working. So he'd been through the whole cycle. And what he said was that to me was a lot changes at university. And I think we've all heard that. Your horizons kind of broaden. And actually, you may change your decision once you get to university and you've seen what else is out there. So essentially, my advice was, look, don't commit yet. And if you still want it, then you can still do it. And that was his advice to me. And it made a lot of sense. So I kind of took that advice, went to university, but I still had that interest. So, but I didn't commit early to get into the army. And when I was at UCL, so I studied at University College London, I didn't join the UOTC, which is the University Officer Training Corps. I think mainly because I was too busy with university life, with friends, going out, making the most of it. But it actually, what I found that when I arrived at Sandhurst after university, I arrived without any prior military training or terminology, even if it was just the university OTC. So I was slightly behind on day one, or that's how I felt anyway. So that was a kind of bit of thought process that I went through when I was looking at the army. And then at the time when I was looking to go to uni, the dot-com boom was happening. So there's lots of change. And I felt like being a part of that change. There was so much happening. Tech was changing so fast, and actually, I think we're in that. We see that now with the development of AI and digital assets and so on as well. So that instinct at the time, actually, that's never left me. I still have those thoughts now, to be honest. And so that got me into computing, and I studied at UCL. When I arrived at uni, that really opened my eyes. I grew up in a town in Oxfordshire, a place called Banbury, and at that time it was relatively small, and London was this kind of bustling city, lots going on, and so for me, it was always the destination that I was going to go to university. And when I arrived at university, there, it really opened my eyes. There was a lot more roles, jobs that I'd never ever thought or knew existed, such as investment banking, and there were so many things out there, which when you come from a town, you're not necessarily aware of. And so there was lots of buzz going on, which was great. And also, I found that a lot of my friends were applying for internships, and most of those were at banks. Especially at UCL, the banks used to come to on the milk rounds to the university to go and recruit. So then, when I came to graduation, I had an offer on the table from JP Morgan, which was on one of their grad programs. At that time, I turned it down. And that's because what I really wanted to do at the time was I actually wanted to fly. So I wanted to join the RAF. So I went through the whole the selection process for becoming a pilot, and then realized towards the latter stages that actually I had a minor color deficiency of the medical. So I had no idea I had that up until that point. And obviously, for a pilot, you need to be able to see every single LED when you're in the cockpit. That's a non-negotiable, which kind of makes sense, right? And yeah, you don't want to be stuck there when you're pressing the wrong buttons. So for me, that ruled out flying. So that was that. But I still wanted to go into the military. I come from a Sikh background, and we have a huge military tradition. And actually, in my family, we have a military tradition going back generations. So my grandfather, he was in the Indian Army, and he also worked alongside the British Army as well. My great grandfather and beyond also had a similar tradition as well. And my dad actually grew up as an army kid. My grandfather was stationed in Delhi, in India, before he moved when he retired to the UK. So actually, when I was a kid, at my parents' house, there was lots of medals, my grandfather's medals, swords, lots of military memorabilia on display. So there was a constant reminder of service and sacrifice. So I guess that had a lot to play in when I was kind of growing up with regards to instilling values of service and so on. But I'd say for me personally, it was service is one aspect, but the other side was adventure. I'm quite an adventurous person. I like to be in the thick of things, and I like the idea of being in the thick of it and in a difficult situation and figuring it out. When you're a kid, when you're that age, you don't really know what that means, because you're still, building your experience base of life. But that was kind of, my kind of main thought process at the time. And also, actually, my mum had quite a bit to do with it, especially on the service side. So she did a lot of work and still does in the community, charity work, and she gives up a lot of her time for other people. So that sense of service was always there around me as I was growing up. So I guess it was a combination of service, adventure, wanting a kind of stressed environment, even though I didn't quite know what that meant, but I wanted somewhere that would push me. When I graduated, I went to Sandhurst, the Royal Military Academy, Sandhurst, and that's where you do your training. It's a 1 year, I would say, selection course, but also a training course. It's bloody tough. It's not easy. But actually, before going into the army, I would say, look, I had a strong physical base. You have to be physically fit to go into the army. but also to go to Sandhurst because you can't lead soldiers, you can't lead people when you're flagging up the back. So you've got to be physically fit and physically strong. And actually, for me, I've always had sport in my life. When I was younger, I was under 16 bronze medalist in the National Karate Championships. Then I moved on to Taekwondo, where I picked up a bronze medal in the men's lightweight middle category. Um, got a couple of medals up there somewhere on the mantelpiece. Well, they're up there actually at home. So kind of fitness has always been there, and army fitness, I would say, is very different actually. So, you used to lift weights as you do, especially when you're younger. It kind of makes you look good, and so on. But actually, army fitness is very different, or military fitness. It's not just about lifting weights. It's about being strong and it being functional and having endurance. So, I had a good foundation to go into Sandhurst. So that did definitely help. I guess I didn't really know much about going into Sandhurst was the amount on the mental side. There was a lot of work on the educational side about learning about defense history, which was fascinating and amazing and enriching. Um, but also been physically tested and mentally tested at the same time. Yeah, you're really being pushed to the extreme, both physically and mentally, which I'll maybe come to next. Actually, I'll kind of go through. I'll give you an idea of an exercise that officer cadets do at Sandhurst, and that one was called exercise long reach. It's one of those that anyone who's been through Sandhurst, you will never forget that exercise. It's one of those, and it's a race against the other teams. So you're broken down into teams. It's in the Black Mountains, in the Brecon Beacons in Wales, and I'd say it goes on for just over it goes over 24 hours, and you've got checkpoints throughout, and you've got tasks at each checkpoint. At the same time, you're lifting 40 to 50 kilos on your back in a Bergen. And at that point, sorry, there are points throughout the exercise where you actually are walking, but you're sleeping at the same time and you're hallucinating. It's really weird. So your body is being pushed to the absolute limit. It's absolutely nuts. And but what you do have is you have a great team dynamic. And during that exercise, people went through peaks and troughs at different stages. And the kind of the role of your teammates is really to support and help each other, because you don't want to let your team down, and you just keep moving forward. So it was a looking back now, it was a great exercise. At the time, I probably wouldn't have said that. It's easy to look back in hindsight, and what most people I think never really know or haven't seen is what they're truly capable of, and I think that's what military training does is it really you're being pushed to extremes. So that what that does is it removes any uncertainty about your capability, because you have been pushed to such extreme. So for me, I think looking back, it's been a great experience. It's made me who I am today to a certain degree, and also helped me push kind of boundaries in other aspects. So that was my kind of Sandhurst kind of story. I could sit here all day talking about this. And after Sandhurst, I then went on to my first posting, which was in Germany. So I was stationed there for a couple of years. Had a great squadron, great people, had a great time. And then whilst I was out there in Germany, I was then posted out to Iraq on Telic 8. And at that time, the coalition forces were closing down bases. So they're starting to close down bases in Basra and other places further deeper into Iraq, because everyone was getting ready to pull out. There's two dangerous aspects of any kind of military warfare. It's the initial phase when you're going in, but also the end phases when you're pulling out. And this was that kind of period where we were starting to pull out. And what happened was that as we were closing bases, we were seeing an increased number of attacks. And for the other side, the reason they were doing it because they wanted video footage to, win over their own hearts and minds on their side. So they were looking for they were looking for video footage, morale boosting stuff, morale boosting targets, etc. So they can push their own agenda. So it was a bit of a crazy time. But I also remember during that time in Iraq, I was there in the summer, and you're wearing body armor, and then you're wearing your other kit on top in terms of your ammo, weapons. It's not light. So it's 50 degrees outside, no air conditioning in kind of vehicles. You're sweating like a dog, and you still have to perform because you genuinely have lives at risk. Bit of a crazy time. But also during that time, I remember there was we did a half marathon on the air base. We had this military base in Basra. So we were simultaneously preparing for mortar attacks before we started doing this half marathon around this airbase. So it was genuinely nuts, genuinely nuts. It was pretty crazy. So yeah, sorry, going back on point about the army, I would say what people probably don't understand if you haven't been in the military or been exposed to the military is it's not a job. It's actually a lifestyle. After you've finished for the day, you don't go back to your room and check your emails and stop thinking about it. Whether it's a Saturday, Sunday, whatever the day is, you're always preparing. There was a time we had an exercise in Poland in the snow in the winter where we were preparing ahead of going to Iraq in 50 degrees. So you had these like two extremes. You don't have any days off. You're there working 7 days a week. And that's because it's not a job, right? It's you're preparing to go into a war zone. So completely different. And also, the job of an officer is very different. It's not, I think people have this view that in the army you just shout at people and get things done. Actually, it doesn't work like that at all. You win the respect and trust of people, either other officers and other soldiers, people that work for you, by leading by example, leading from the front, and they should feel comfortable that you have their life in your hands, and they can trust you. And that is super important, but you don't get that. It's not served on a plate. When you go to a new unit, you have to really work hard to earn that from the people that you're serving. So during my time in the army, when you commission, you join as a second lieutenant, and then if you get promoted, I went to lieutenant, and then got promoted again to captain. And in my final position, I was based in Purbright in Surrey, where I was squadron second in command at a training regiment, training the next generation of soldiers coming into the army. So it was a great experience that you can shape these young people coming from different backgrounds, wanting to serve their country.
What that must have given you then going into the corporate world and coming out of that. So you touched on, being exposed to different careers when you were at university in London, going to London for the first time, and hearing about the companies that were doing road shows and being exposed to that. So when you were in the army, you were thinking about what was next. What were you thinking in terms of what that could look like? What was most interesting to you, and how did that sort of shape your decision in terms of coming out of that and then and moving into the corporate world?
Yeah, so when I was at uni, I studied computing, so it was a mathematical degree, and I've always enjoyed maths. And so for me, my next role would have been something to do with numbers. Just I was good at it. Had some exposure when I was at university as well with that, especially when you're doing the interviews, doing the road shows, learning what different roles are out there. I found that really resonated with me, and I would be good at it. So I honed in on kind of two areas. One was banking, and the other one was consulting. Um, but in the kind of financial services space, again, it was all numbers based. And when you leave the army, you have to give a year's notice. I don't know if it's still the same now, it might have changed, but you had to give a year's notice. and you have to ask for permission from the commanding officer, from the Kun. So you have to do this handwritten letter asking for permission why you want to leave. And I think it's more kind of just tradition more than anything else, but you still have to do it nonetheless. So when I handed my notice in, I started then speaking to people in my network, friends who'd gone into graduate jobs and had then progressed thereafter, but also started speaking to other people who were had been in the military, so ex-military people um, who were doing those roles, for a couple of things. One was to get some friendly advice about what roles were like and what I should be doing, but also at that time, as I got closer to my leave date, the financial crisis hit. So it was really unprecedented times. I did actually have a job offer with Barclays at the time, which then got put on hold largely indefinitely. And I was told to look, we would advise you to maybe look elsewhere because we don't know when we can rehire again. Due to the financial crisis and the amount of jobs that were lost, etc. So then what I did is I then started aggressively networking with ex-military people, but also people within. At the time, I was studying a finance. I started studying a finance MBA as well from Manchester Business School, and the sole reason for that was to help me bridge the that transition gap. So going in from military to, let's say, into financial services, yeah, a lot of people thinking, and what, how, and why are you making that move? So I saw the MBA, the finance MBA, as a way for me to speak the speak, as it were, going into those roles, and it acted a bit more of a natural transition into going back into financial services or into financial services. But also it gave me a network to leverage as well. So as I was coming to as the Barclays offer got put on hold, I then eventually found a role in Lloyd's of London, which was through networking. I was offered again two roles at the time. One was at Howdens, and that was through an ex-military contact. I still remember the guy's name actually. His name was Mike Lobb, and he was an ex-para, I think, if I remember rightly. So he was a senior leader at the time in the insurance industry. Met him several times, and he actually offered me a job as a Lloyd's of London broker. I think it was just a broker at Howdens, insurance broker. Um, and also at the time, there was a guy called Dan Lott at a company called London Market Insurance Brokers. And he quite liked my background because I'd studied computing at uni, so it was mathematical. And what this broker did is they had a pen from the underwriters, which means they could underwrite their own policies on behalf of an underwriter. So they had a quite interesting edge in the market at the time. And he got me in, and I had an interview with him and also the chairman. So it's quite a small company, and the chairman's son was also ex-military, but he was an underwriter at that time in Lloyd's of London. So he said, "Look, I'll give you a break. It's tough times," and he understood the whole transition and so on. So he then gave me a break, and I ended up joining London Market Insurance Brokers as a Lloyd's of London broker, and it was a super steep learning curve. And I think the difference, so I had a salary plus commission, and for me, it was, I think the hardest transition was that I'm going into a new space where it's a small company, I'm getting paid a salary, and you really have to show your worth pretty quickly. And I kind of relished the opportunity, which was great. It was something new for me, something exciting,
Yeah.
and also learned how a lot of things work in the insurance industry. The chairman took me under his wing a bit as well, which was great. So I learned a lot from him. I actually applied a lot of that later when I then moved into banking. So I was still applying for banking roles because that was kind of where I really wanted to end up. So I was still networking with people. I was still applying for roles, etc. And then after a year of doing broking, I then had again two offers. One was from Citi in their wealth management arm, and that was via another ex-military guy actually who did a intro to a guy in his village who worked at Citi. Quite bizarre. So I went to Citi, several interviews, and eventually, they really liked me, liked my kind of attitude of how I just gets things done. Had another opportunity at Lloyd's Banking Group where there was a guy called Mark Elliott, also ex-military, um, who was in the he was a managing director at the time in their derivatives team, and over time, he became my mentor in a way, and said actually they're recruiting for an associate level entry, which was like an MBA entrant program. So they had 2 programs, a grad program and a MBA program. So I joined on the MBA program, and he said, "Look, if Mark said to me, if you come to Lloyd's Banking Group, I'll kind of make sure that someone takes you under their wing early, and you'll learn very very quickly. You'll be given lots of responsibility early on. So based on that, I then decided to go for Lloyd's, and that was my kind of transition into financial services, into banking. But actually, looking back, it was a really tough transition. It wasn't easy. Often the online applications, filtered out at every stage because I wasn't in financial services, and people couldn't quite see why you're going from military or army to financial services. So what worked for me was going through that's why I aggressively went down the networking route, to leverage on all the ex-military people, um, and get their advice. Tried to walk away with 3 contacts that they could put me in touch with, and then very quickly my book of contacts got pretty big. Whether they were ex-military or not, I would always try and get 3 people's contacts. So in a way, it was a solid job, full-time job, trying to move into financial services out of the army. I think that kind of answers your question, hopefully.
I did just want to ask on the so when if we just go back slightly, when you handed in your the Hammer's letter to the colonel, um in an executive level hiring anyway, there was always this discussion around counter offers and that sort of thing. Was that ever something that they pushed back on in terms of saying, well, do you think this is the right idea? Was there any perhaps not incented, but is there any way in which they would look to sort of keep you in at that point, and then also in that transition phase, because a year long notice period is a long time. You're going through the period, financial crisis hits. At that point, is there any opportunity for you to reconsider and stay in at that point?
Yeah, so at the time when you hand in the notice, uh, when I wrote the letter and gave it to the colonel, he was like, obviously he was, do you want to leave? And is there anything that, we could do to make you stay, whether it's a posting? In terms of pay, typically, it's, you're not doing military service for pay. And actually, they have very strict bounds about what you get paid, depending what level or grade you are. So, but it was more about the leverage that they would have to keep you would be, okay, we can give you this posting, we can send you there, we can give you this responsibility, etc. So yes, that did happen, but I think for me, once I'd made my mind up, because it's not an easy decision to leave the army once you're in. Sorry, your second question was. Do you
Yeah.
mind just kind of refreshing on that?
No, second question was that sort of transition out over that year, that period. Obviously, with everything going on, financial crisis. Whether or not at that point there's an opportunity to say,
Ah,
actually, I've thought
yeah.
about it, and you know what?
Yeah, so I would say, look, there's always because it's a year, you can always then rescind your offer or rescind your notice. That's definitely doable, and actually, I think one of my friends at the time did do that just to kind of blow things over. I think for me, my decision process at the time was, okay, I've now decided to leave, but if I leave it too long, then it also makes it then harder to go into a new career at the right level because you'll be older, you would want a more senior position. Whereas I was up that kind of probably that right sweet spot kind of point where I could join as an associate on a program, just about. I think if I was in for another 2 years, then probably would have want I probably would want and need to join as maybe slightly more senior. Then it makes it harder to then get in. So probably a mixture of those two were kind of the thought processes that I went through.
Your sort of route into networking, obviously finding other people that had trodden a similar path into that, and giving you opportunities. That was 17 years ago now. When you did that,
Thanks for
d-
reminding me.
yeah, just to put it into perspective. But do you, in that time, have things got, as far as you know, for people making their transition into financial markets, into banking, has that got better? And is that something that you've been able to, play your own role in for other people coming out of the military?
Yeah, great question. Has it got better? I think the army and the military generally is doing more for people to transition from military service to civvy street. Probably not as much as should be done, in my opinion. I think there's a lot more courses now for more hands-on skills. So let's say if you want to become a plumber or those type of things. Again, I'm not an expert on that, just from what I've heard. So that's okay for some people, but not okay for everybody else. So I think a lot more can be done. I think the constraint actually for the military is the funding that's available. Because when you transition, all of these things, everything costs money. Whether it's you're sending someone on a training program, whether it's to have a partnership with employers, there is an investment in that which is required. So that I think could be better, both at an army and general military level, but also from a kind of think a wider societal perspective as well. I think if I look at the US, for example, they are great. They're so good at, no doubt they can do more, but they are very good at looking after their veterans, and they have specific programs for which veterans can join at large firms, even smaller firms, and there's a lot more incentives for them for employers to take veterans on as well. And you'll see that sometimes when you apply for roles for a US company, they will say, "Are you a veteran?" And so that I think is a real positive that the US does. Maybe we can take a leaf out of their book on that. In terms of my part, so yes, a lot of people helped me when I left, and yes, I've helped a lot of people. I was going through a period where I was meeting someone once a week, um, for a coffee to give my perspective, to introduce them to other people. And I think why do people do that? I think all of us who have served, you just do that without thinking. It's you're helping someone. It's a shared experience that you've had, and you're part of the same family. So you really do that without thinking, and you know how tough it is to go through that journey when you're making that transition. So all you want to do is anybody who's coming out is give them as much help and guidance as you can. I recently joined a group called Veterans Can, and that's about veterans who are either leaving, have recently left, or were veterans at one point. And it's a community to get people talking and also to share ideas. And it's a great initiative. I was on a Zoom call a couple of weeks ago on that, and it's really quite impressive about the level of help that goes on in that relatively new community forum. So I think there's more being done now by individuals are setting groups up, and I think that's really positive. But I think there's a lot more that can be done, both from a society level. Maybe maybe government intervention is needed, but I think using the US model, that's definitely something we should be doing.
You take that role into Lloyd's banking group. into the banking role that you'd been searching for and wanting for a while. It'd be great to hear more about that and that experience and how that set you on the path to where you are now.
Yeah, it's when you talk about 17 years, well, that really puts it into perspective, right? It's a long time. So, lie about my age, I'm 21. But yeah. Anyway, I'm solely off piece there. Yeah, so look, when I was at Lloyd's, I joined the derivative sales and structuring desk. So it was what they called structured solutions. And I initially joined the project finance team, which looked after infrastructure clients. So things like water, utilities, etc. And at that time, that team was managed by actually two guys, Nick Hughes and Tim Seigold, who are both still at Lloyd's. Um, and I was working directly for Tim. And I must say, looking back in my career, he was such a great mentor to me at the time. He really took me under his wing. He used to sit down with me, draw diagrams about looking at how different cash flows work. Uh, I think, to be honest, he was in the wrong profession. He should have been the teacher. The way he was going to teach me, it was great. And he took me through, step by step, really helped with my understanding and teaching me about derivatives and about how the business works. And not many people, now I have a lot more experience. Not many people do that. You know, most people they have their own targets. It's a highly pressurized environment, so they focus on that. But actually, he made the time. So, fair play to him, and I really give hats off to him, and I do really appreciate all the work that he did for me back then. So that's a bit of a shout out, and but that gave me a solid foundation for everything else that followed. So had some really good years at Lloyd's. And when I was at Lloyd's, I joined as an associate on the infrastructure project finance desk. I then made associate director and then rotated to the corporate real estate desk. So looking after corporate real estate names, still under derivatives, but looking after different client sector. And that was under Mark Elliott, who kind of helped me get into Lloyd's. And so had some great experience there. Had direct interaction with clients. Had my own book of clients, so I got some good responsibility from a relatively early stage. So I was at SMBC. So I was at Lloyd's for 3 years in total, and then an opportunity came up at this Japanese bank at the time called SMBC, and they were looking to build out a corporate derivatives desk. And at Lloyd's, I've been working really hard to kind of catch up with people because, for me, I was doing military into financial services and I wanted to kind of catch up with my other peers, including peers from university who were in banking. So that 3 years, I squashed a lot in there. And then the opportunity at SMBC came up, and they didn't want a managing director to come in to build this desk out. They wanted someone who was hungry, who was willing to roll up his sleeves and get stuck in, because there was lots of work to do, both internally and also externally with clients um, as well. And they wanted someone who would stay and wanted to grow with the whole build out. So at the time, I was an associate director at Lloyd's. I joined SMBC as a VP, as a vice president, which sounds quite grand, but for those in financial services, it's a kind of a mid-tier level role. And although I think my dad used to put up my business card, vice president, on the mantelpiece at home, kind of sound grand, but it's not. uh, it's quite funny. Yeah. Um, SMBC at the time had gone through, was starting a really interesting journey. So they had a JV up until that time with a Japanese securities house called Daiwa Securities. And that kind of broke down, and SMBC had the chance, or they acquired Nikko Securities from Citigroup in Japan. So SMBC Nikko was a relatively new entity. I think maybe it was a year old, maybe when I got there, and they just set it up. And the ambition at the time for them was to have aggressive growth outside Japan and become a global player in the capital markets space. So they were a huge lender globally for uh, infrastructure projects. At that time, I think they were even then project finance bank of the year globally. They were the biggest lender globally for project finance. It was nuts, but I'd never heard of them at that time. And so for me, it was a really exciting opportunity because I could help to build something from ground up and also shape it from the get go. So for me, it was an easy opportunity to agree to, and at that time, it was, I guess, the phase I was in when I started. It was a one man band. It was just me in corporate derivatives, covering the whole of Europe, and also trying to get it off the ground. So I was traveling from London to Derby to Milan to Rome to Madrid to Scandinavia to Germany. So I was kind of covering all of Europe, and I was sitting on the trading floor, only 2 seats away from the deputy president of this investment bank, Securities House, and 3 seats away from the president, Anthony Yates, who's still there. So it was great exposure. It was fast. It was entrepreneurial. And at that time, year on year, I was smashing revenue targets year on year. It was great. It was, every year was a high. It was crazy. It was absolutely crazy. And I learned a lot during that journey. So when I built the business there, is it wasn't just client facing business, it was also looking at the internal side. So doing teach-ins to the credit department within the bank about what is a derivative, why does it matter. Um, Also teach-ins to relationship managers, the coverage bankers, about the basics of why this product is good for their clients and why it's good for them to have a greater product suite, and what that means from the holistic nature of what we're doing for our clients as an overall banking group. And part of that was actually looking at incentive structures because the bankers were very used to uh, giving loans. They give out $100 million loan or 500 million, half a billion. They're high fiving each other that they're giving someone a loan, or, money that they need, right? So a lot of it was looking at the incentive structures about how can we change some of the culture in other aspects of the bank because they were used to it being more of just a corporate banking culture where they're just lending. So I had to design a way and a meaningful way to share some of that revenue with them so that they felt they were part of that transaction and they're getting their targets are part of that, their end of year target. Um, Whether it's KPI. KPIs, I think, can be touch and go. What really matters is the kind of dollar or the kind of sterling or euro target value? Does it really help them reach their end of year target? And that's the bit that was a game changer for me was um, putting the right incentive structure in such that they're incentivized for my business to do well and also for me to get in front of their clients. So I guess we kind of engineered the internal conditions, which then help to build out my business, and also help to build that support in internally, which was tough, and that I learned a lot during that process because you know when you're just at a desk and you're speaking to a client and you're pricing a trade, that's all well and good. But when you're speaking to other departments, they have other priorities. They don't necessarily get what you're trying to do. And you have to go through this educational piece, but also you have to learn about their priorities as well, and the wider banking group, and what the risk appetite is as well. So it's kind of meshing a lot of those together and trying to find out how and why you are part of that puzzle and that piece and what your piece is in that. So that was my initial stages. In the latter years, I was looking after rates, so interest rate derivatives. I then also took over inflation derivatives, so the inflation book, and long dated FX, and also working with the debt capital markets team, so the bond team, the primary origination team. And so the inflation book I took over roughly about in 2022. So that was a good add-on. And with that came a lot more UK infrastructure clients, utility companies, securitized structures, which were inherent for inflation derivatives. And also, the other interesting part of this build out was Brexit. Every bank, every cross-border institution went through the whole process or a very similar process. And so I was involved a lot around the regulatory implications for how we do business in Europe, so cross-border marketing, and what that means for growth constraints, and kind of how to navigate that as well, because what the FCA is saying versus what BaFin is saying in Germany is very different, and what works in the UK may not work in the same manner or the same product in the same way in mainland Europe. So that was another a great learning exercise for me as well, and I learned a lot about that regulatory space. Um, and then as the my business started to grow, in a way, I became a victim of my own success, where the trading books grew so large that capital efficiency became one of the dominant problems for me to solve at that time. So I had to work through and identify correct transaction parameters, fix reporting so trades are captured accurately at the point of entry. There was a changed a lot around reporting. So not just for an internal management information perspective, but to make sure that we're crunching the right numbers and the right data and using that for decision making. So if you have garbage in, you're going to get garbage out. But if you have good data and relevant data, and you're analyzing that in the right way, you can make an effective and decision and the right strategic decision. So things at the times for me were netting was a key one. Internal credit agency, internal credit rating consistency for clients. My clients were typically corporate clients. So where there weren't publicly traded bonds, how do we treat the credit risk of that client? Making sure there's consistency, making sure there's netting and correct netting for those as well, as well as looking at the regulatory side as um, such as risk-weighted assets, the capital the bank holds against a trade, and the forecasting of that to make sure it's not static. Again, getting a bit technical here, but looking at things like as time to maturity for a trade in a book decreases, um, the capital also decreases. It doesn't just stay static. So, changing the internal modeling to look at the life of the transaction. So, these were some of the real changes I looked at and put in place. But then I had a vested interest to do that because it really helped I had to sort it out. It was a real problem for me to sort out at the time, as well as looking at evolving profitability metrics. So, return on equity insights, looking at those. If you have one trade, a one hit wonder, you get it done and don't think about it. The return on that trade versus you do the same trade, but then you have the chance to restructure that same trade three times. Your profitability for that same risk is going to be three times also higher because you've had more revenue points for that transaction, but the risk profile has stayed the same, for example. So looking at those kind of real risks, and Also was looking to build internal coherence and sell that story internally to head office in Tokyo, because the level of understanding is not always the same when you're in a specialist unit. So as you speak to people further up the chain, who are on the board of, in head office, they won't know the nitty gritty and how and why things are moving. So actually winning them and getting them on side was also another part of my role, which was quite interesting, and learned a lot about um, how to adapt my style going forward as well. And then I guess kind of finally coming on to why I stay for 12 years, which is a really good innings at a bank. Um, to be honest, I actually nearly left once. I was very close to leaving. It was about 5 years before the end. Another bank approached me, and they offered me a position, but SMBC really wanted to keep me, so I ended up staying. They gave me more responsibility, and a few other things, and so I ended up staying at SMBC. And also, I had a great ride at SMBC. I built up the business from scratch, so I ended up staying. But what actually kept me, I would say, is also the trajectory of change that was happening, and continued change at SMBC at the time. So I believed in the business and believed in it continuing to grow. And then the final point I would say is, towards the end, actually, I think it was 2022. Me and my team also got an award by Global Capital, and it was recognition of the work that we had done. And this was where clients would vote for banks that they worked with, who they think are, at the top of their game. And my team got an award from Global Capital for corporate derivatives and other swaps. So that was a great recognition for growing a business from ground up to what it had got to at that time.
Fantastic. So, Benjit, one thing that has been clear so far in our discussion is that you've always taken opportunities. You mentioned earlier about seeking adventure, and partly played into your decision to go into the military. But evidence throughout in terms of taking on the role at SMBC as a VP to build something out from scratch, to taking on more responsibility. So clearly you're someone that relishes challenges, relishes opportunities that can present upside. Is that something that you naturally think about or naturally seek, or is it something that you sort of opportunistically look at? How does that sort of play into your role and profile as a leader?
Yeah, I think, look, good question. I think, yeah, as you said, look, going from joining the army, it's not the obvious safe path, in many ways. And then, turning down a JP offer, when leaving university, going from the army to the city, with no finance background, and then Lloyd's banking group to SMBC for this kind of great opportunity to build out with somewhere that they haven't actually proven a growth story. So and then actually spending 12 years at SMBC and now independent, where I'm not in a big corp, and I don't have that brand or that title necessarily. I think the kind of pattern across probably all of those is that I'm probably drawn to things that are not yet settled. So I guess it's the growth aspect, and also where the outcome is not guaranteed. The same was the case at SMBC. Is when I joined SMBC, I was going to start a desk, and there was no guarantee that after a year or two, if it wasn't going to work, my job might be canned, and I'll be, back in the job market, or I'll be in the job market looking for a new role, right? So for me, I guess it's I am drawn to growth. I'm drawn to also constantly pushing myself and also learning something new. I think that's crucial. And learning something new isn't always academic. It could be academic, it could be putting yourself in a new position. It could be the way you're dealing with things. It could be a sense of adventure. And the way I see adventure is not about chaos. It's about actually being willing to be in a situation where you have to figure it out. So again, I used a phrase earlier where it's rolling up your sleeves and getting stuck in, right? That is, I would say, what I love doing. That's also what I'm doing now, I would say.
That'd be great to understand more about what you're doing now. Would love to hear more about what you've been doing since going independent, the work that you've been getting stuck into, and what that looks like.
Yeah, so where I'm at the moment is I'm doing some advisory work around hedge execution and hand holding corporates, and also others such as regional banks as well. So I have some clients around there, again, around the same topic, which is rates, inflation, FX, and also a little bit on the debt side as well. Um, and I also have a digital assets business which is live. And I guess taking a step back is when I left SMBC, one of the things I initially did was I took a bit of time intentionally to um, rethink and regroup, because often what happens is if you quickly move into something else, you don't have that brain or mind space to think about what should decisively come next. And we're in an era where a lot is changing, a bit like the .com remark I made at the beginning. Is there's so much change happening in with AI. There's so much change happening in the crypto space, in digital assets, and that's having a huge impact on traditional finance, but also the newer areas of financing as well. So that to me has been really exciting. And so what I'm doing at the moment is on the digital asset side is I wanted to build something which was at the intersection of um, institutional credibility and the next generation of financial infrastructure. So, what I'm doing on the digital asset side is data analytics, looking at trading signals, and then using those trading signals to go into the market and trade. And historically, in traditional financing or traders at banks, they have a very traditional financing lens of how they evaluate transactions, how they evaluate moves, etc. Whereas when you look into the digital asset space, it's completely different. People are looking at then they're not holding on to those traditional ways of analytics. So, for example, we look at things like social media scraping as one. Looking at certain influencers and seeing what impact it has whenever they do a tweet. When Donald Trump is saying something, what that does to financial market, and being able to trade very quickly off the back of those. So that's the kind of difference now. And I think what I do now is I spend a lot of my time in that space, kind of bridging that gap between traditional finance and also the newer digital asset space, because there's so much there that can be kind of brought together and brought make things more effective and more efficient. And I use a simple example of when people are buying a house, you go through the conveyancing process and it takes so long and it's so archaic. Firstly, you have to get searches done. Um, you go to your council and that takes 6 to 8 weeks. You know, that information is not changing. It's in a central repository. So using the way digital assets uses repositories, that really speeds up the way that how fast a transaction can happen, and how quickly you can pull data sets. So that's on that, but also on the financial side of the transaction, you're not having to wait for a transfer to clear. With digital assets, even stable coins, you can uh, get that transaction verified often in seconds. So speed is definitely a good thing. Obviously, there's a lot more work to be done around the infrastructure. So that's some of the things that I'm kind of also working on at the moment. So the what I've built out is an algo trading platform which uses data analytics, AI, machine learning, um, and also looking at the infrastructure across digital assets, but also traditional assets as well.
Wow. Look, it's certainly a conversation that's coming up more and more. You talk to execs working in banking and financial markets about what's next. What does that mean for them and their roles, but also the work around them. So, for someone like yourself with a traditional capital markets background that's now been working into the digital assets space independently, for someone listening to this, what does someone with that sort of experience make of where the crypto digital finance space is heading, and where does the institutional world need to catch up?
Yeah, so I think there is definitely a space for both. I think if we look at uh, traditional banking space, for example, they've got a lot of balance sheet power. They understand customers and their client set really, really well. And one thing they're not so good at is sometimes cross fertilizing across uh, sectors and clients, and then what does that mean as a result? And I think that's where the way digital assets and AI works can really help the traditional financing space. Could be from a credit rating perspective, could be from a counterparty risk perspective. There's so many different avenues that could be used there. It could definitely be helpful. But even on the trading side, I think there will be a huge change in the years to come with regards to a lot of roles. Um, for example, if we use a simple example of an analyst on a desk using AI to analyze annual reports of a company and go through and see, okay, well, what are the risks and opportunities with this particular client and for this particular client? Trawling through the annual report is not a great value add of their time. What is good value add is actually how you use that information and what you do as a result, i.e., the solution or building the relationship. So I think that's where traditional finance will and needs to move to. But I think being the kind of Goliath towers that they are, these type of moves, they're always slow at making those moves quickly, which is not necessarily a bad thing, because that also gives you stability. And these are banks who are holding your cash often, right? So, but that also creates an opportunity, or has created an opportunity for a lot more fintechs. So if you look at the payment sector, if you look at custody of digital assets, even looking at bank accounts, you've got the likes of Revolut and Monzo coming in, which have over the years changed how banking has worked, because everything's now on your app and it's super intuitive, right? If you get locked out of your account, it does Face ID recognition to make sure it's secure, and then you can continue on your app. You don't need to go to a high street branch with your passport to get it validated that it's you to get your account opening again. So I think the digital asset space is definitely good to push the traditional asset space. I think the traditional asset space will go through its own cycle of change to become more efficient, but also more effective. Um, Again, for the reasons I talked about, having more value, and but there's definitely a space for the traditional asset space. I think a lot of roles will change, and they should change. There's a lot of overweight departments uh, in banks and other financial institutions with the rise of AI and how good it's now become, and the proper adoption of AI, it will actually also drive greater shareholder value, right? So I think it's only a positive. And I think if you're at the intersection of traditional financing and also digital assets, I think it also positions you well, because you know the traditional financing side, And I've been involved in digital assets probably for about a decade. Even though I've been at SMBC, I've been doing a lot in crypto, well, increasingly amounting in the crypto space and understanding the market over the last 10 years. And that's accelerated more so over the last year. So I think, if you're in a position where people like me who are at that intersection, and I think there's a few people out there now, that puts you in a really, really good spot because you can speak to regulators, because you understand markets. You can speak to the banks because you understand the banks. You can speak to the digital asset firms and you understand what products they're trying to do. You're not just stuck into this is my product and that's it. You have an innovation hat on and a growth and drive hat on.
So if we focused on digital assets, it'd be great to hear more about the work that you've been doing in that space, where it began, and what you're up to now.
Yeah, great. So I'm not a recent convert to the digital asset space. I've been in that area for the last 10 years or so, but more so with a light touch. Um, and going independent, what that has, i.e., since leaving SMBC, that's allowed me a lot more space to actually build on that rather than just be an observer or a light touch user. So back in July last year, I co-founded a digital assets business with my business partner Sachin Shah. He comes from a technical FX trading background, whereas my background, as you know, is more markets and kind of risk framework, etc. On the rate side. So together, we actually have quite a good skill set, and we do push each other with regards to building out this digital assets business. So it's data analytics platform that pulls in both traditional signals and also non-traditional ones as well, such as looking at sentiment, social media scraping. So looking at certain social media influencers and when they tweet and the type of tweet that they do, for example, what that does to prices of particular assets, on-chain data analysis as well. Also looking at guardrails, what we need to put in place, circuit breakers. So it's actually got us thinking about things in a completely different way to what we were used to thinking, completely different from the traditional finance way of managing a trading book, which is, very simply stop loss, take profit. You have a book, you have risk parameters, and then off you go. You trade within your risk parameters. In the digital asset space, there's a lot more to it. So learning about, we were aware of those, but we hadn't implemented those when we were working in kind of big corporations. But now we've been on ourselves and working by ourselves, it's allowed us to really look at all of the factors across traditional and non-traditional, put those together and build a truly holistic data analytics platform. What that is then used for is we then use that for signaling. So, are you looking at signal quality for a trade? We look at regime identifiers. Is it a bear market, bull market, or choppy, etc.? Also, looking at things like execution discipline, counterparty risk, and also capital efficiency for the portfolio. And these are not new problems, but there are it's a lot more complex in the digital asset space because of the way it works and how transparent some of those parameters and risks actually are. So in a way, it actually becomes easier to monitor those if you know how to and what to monitor. So that's been really interesting. So we've brought our experience together from the traditional financing space, the banking space, sales and trading, into the digital asset space. Um, and we're essentially using the data analytics platform that we built, use that to generate trading signals. Then off the back of that, we have trading books. So we have a short-term trading model, we have a medium-term trading model, and we hold different assets in the portfolio or each of those as well. And every day we're learning. So recently we had a bear market, and we had to tweak the model, and there were some things in there that we hadn't thought about. So it's actually really fun. It's been hard work, but it's also made us think from a different perspective, um, especially as new things are coming to the market. So we're constantly kind of on the edge, as it were. Um, and we also have, as part of our structure or infrastructure, we have machine learning in there as well to help with some of the data analytics and also some of the wallet identification to manage the risk side of the trades as well. So yeah, no, it's been really interesting. It's a really evolving space. There's lots more to do in the digital asset infrastructure space as well. So we are also have a lot of discussions with people about digital asset infrastructure, what that looks like, especially given my experience in the traditional financing space.
Brilliant. This sounds like such an exciting project to be working on. So, looking back at your career starting in the city in 2009, what would you go back and tell yourself?
Yeah, interesting question. I think firstly I would look at what did I get right, and basically keep doing it, which was the spreadsheets. I love spreadsheets. um, keeping track of who I've met for a coffee, and that systematic follow through. I think that's definitely something I did right, got right, and I would continue to do. So tracking who I'd spoken to, also who referred me as well, because that's also equally as important. Because they've gone out of their way to put you in touch with someone that they know in their network. So that's fundamental, and also what the next step is. So again, coming back to that whole spreadsheet, that data, making sure you're on top of and tracking how, who, why is happening, and I guess also is probably without realizing is my military instinct, which I've been applying daily and throughout my career. And I apply that to a new context in terms of you have a problem, you figure out how you're going to move forward or fix it, and you just crack on with it. You know, I don't. Even now, I don't look at, okay, I have a plan and it needs to be perfect. You know, I just start making baby steps towards it. And before you know it, you're there. So I think that has definitely helped me. What I would change, I think, probably two things. The firstly is uh, going back, I would build a broader network a lot earlier and more deliberately in my career. So the people that I was sitting around in 2009, now they're all senior figures across the industry. So, you have a bit of a network from that. But it's not the bit that I could have done better was those people who were in that cohort, but across other different departments. So you spread your net wider and start networking earlier. Because when they do move to different banks, different organizations, again, you have a much wider and bigger and breadth of network. So that's probably something I would have learned from over my time, over my career, is a strength of your network. And also invest in those relationships, and don't invest in those when you need them, because then you need them. It's invest in those relationships before you need them. Um, because that then is a proper relationship. It's a long-term relationship rather than transactional. I need your help. And then at that point, you're less likely to need it. And the same is the case when someone comes to you, is if you have an invested relationship, you're more likely to help subconsciously. So I think for me, that's definitely one thing I would have worked on slightly differently, is working that breadth of network a lot earlier in my career. The second point I would say is kind of linked to that first point, the previous point I mentioned, which was it's about breadth, but not in networking, but in the experience that you gain. So when I was at Lloyd's and I had this SMBC opportunity, I also had an opportunity. For some reason, they all seem to be coming in twos. I've just realised. Um, and but I also had the opportunity around that same time. I was applying to a global bank, and I was interviewing, and I was offered a position at another Asian bank, but it was in Hong Kong, and that would have been on a rotation program, 18 months, rotating around various different departments across various different divisions of the bank. And the reason I didn't take that is because, whatever age you are, you always think you're losing time if you're not moving forward. It's a bit like when you're studying your GCSEs or your A levels. 1 year is not going to change anything. You go traveling for a year, right? You can continue studying afterwards. But when you're at that time point, when you're at that juncture, that 1 year seems like a whole lifetime, right? And you feel like if you don't move forward and feel like you're honing in on something, it's and kind of getting to the top of a skill set or towards the top of a skill set, then it's not progressing somewhere. So, and that's how I felt at the time, is that I was going from associate to associate director at Lloyd's. I was looking after a book of clients, and then from there, if I took this rotation opportunity, it was a little bit of a one step back. That's the way I looked at it. Although it did give me breadth, whereas the SMBC opportunity was going forward and was more laser focused on what I was doing, and also gave me this opportunity. In hindsight, look, it was a great thing. My ride at SMBC has been great, and had been great. And who knows what would have happened if I took that other role. But I think what I've seen is the best financial leaders, or leaders in any market, are the ones who have greater breadth on their CV, having worked in different divisions or different business units in different geographies, because then you have more exposure how different businesses, different jurisdictions work, different regulations work, different people work, and it places you very strongly for those senior positions. But look, who knows what would have happened? I think we're talking about learning points. So I think that's one thing I would probably do differently, is get more breadth on your CV. That's probably a bit of advice there for people building their career at the moment as well, is get breadth out there. So at the time, actually, the decision to me seemed logical, but in hindsight, as someone who's been through that whole process now, you look at it from a different perspective. But what I found that I did do is, even though I didn't have breadth in my direct role per se, I ended up creating it. So I built those relationships across different product lines at SMBC. So whether it's the fixed income sales and trading team, whether it's the equity capital markets team, whether it's the credit team, whether it's some other team, I ended up doing that on my own, which actually was a great thing to do, because it also means that you're getting involved beyond your immediate responsibility. So creating that breadth I did for myself in the end, which worked, but not everybody does that.
Brilliant. Thanks for that, and that's great advice to anyone listening. So, a great 17 years so far in the city. You're working on some really exciting projects at the moment. What does the next chapter of your career look like?
I took the time after SMBC to be intentional about really thinking about what I'm doing next, and being selective, and also being relevant in the current climate. As I said earlier, there's a lot of change going on, a bit like that dot-com boom. I keep referring to that. And, there's an explosion in change, not just in finance, in every area of industry, every sector. There's so many changes going on. It's crazy. But also that creates an opportunity from a personal growth perspective. The amount that you're learning now to keep up is a lot, right? I'm pretty well versed in AI, in the use of AI, but that's only what I'm doing. There's so many ways to use it, but I'm constantly keeping on top of the latest in terms of how to use it, what's happening, are we using the right structures, etc. So I think we are in a very exciting, interesting time, and I guess for me, I want to build something at the intersection of institutional credibility and the next generation of financial infrastructure. Now, I think I mentioned that earlier about the digital asset space, traditional finance. I think that is a huge growth area and a very interesting area to be in as well. And the problem that really excites me is where traditional market expertise that still matters, but it is maturing, it is changing. So having being well versed in execution, governance, regulatory exposure, and being aware of what's important and why is also super important. And that they're kind of areas I'm constantly kind of touching and working on. So they are of natural interest to me. But look, hey, I'm a entrepreneurial operator, I would say, and I'm at my best when I'm building something, which SMBC, I guess, has proved that with the advisory work and the systematic digital asset platform that I'm building, also proves that as well. And I guess, look, to finish off, is I've spent 12 years building something from nothing inside a large institution. And I kind of know what it takes. It's very different to doing it on your own because you have to win other people, other departments. You have to explain to them. You have to understand the risk appetite, the priorities of the organization in order to push the project that you're trying to build. It's not as straightforward as a one man band, i.e., not a big corporate. You can just do your own thing. This is a good idea. You can be dynamic, right? So ideally, I want to do that again somewhere where the stakes are real and also the direction is not quite yet fixed. Because I like that idea of being part of that growth story. So yeah, executive role, board seat, something more unconventional. Yeah, something which is problem solving and where I can really add value to the team.
Awesome. Well, you've had a such an exciting career so far. Some of the stories, some of the insights you've shared today have been fascinating. Thank you so much for doing that. And whatever you do next, I know it's going to be just as adventurous and just as exciting. So, thanks so much for your time today and coming on and sharing that with us.
Great. Well, I appreciate it. And thanks for inviting me, Bill.
My pleasure. No, great speaking with you. Thanks, Benjit.